Morning, everyone. Paul Duncan here with GammaEdge. It is Thursday, the 31st of March, last day of the quarter. Let's get started. Significant change from yesterday. Yesterday we saw a lot of positive movement in the net cumulative GEX, and what you'll see over the next 2 or 3 slides is that the condition has eroded significantly. When we take a look at the SPX, we've had the net negative cumulative GEX move up, and we've had the net positive. We call these the wing charts, and the red wing is up, the green wing is down in the SPX. What that is indicative of is that put protection is being added, short-term put protection is being added, and some of the monetization that we talked about yesterday and that we did see actually occurred, causing the net positive cumulative GEX to drop. And we're seeing that in the SPX, a fairly significant amount compared to the previous day here in the SPY and on both sides of the wings. The Qs, same thing. We've gone from a net positive gamma condition where the green wing is above the red wing to a reversal of that. So this is almost a failure in that context. And the IWM looked like it was making progress yesterday. Go back to yesterday's presentation and review the front part of that video, and you'll see we've actually decreased quite a bit here. So for this reason, we're coloring everything yellow, cautionary. Not saying to panic or anything like that, of course. If you have profits, you may want to take a look at them. Looks like the indices are at a turning point, and we'll just have to see how we go the next few days. When we take a look at the 0 DTE, today is the end of the quarter, which is why we have a 0 DTE today. And yesterday, we had a fairly strong pattern across the board where we had the closing price of the previous day well above the positive gamma level. And we suggested yesterday that this could set up a monetization event, which would put pressure on the markets yesterday, and that's exactly what we saw. You can see that the spot price is now coincident at 4,600 on the SPX. We actually fell below 460 on the SPY. We were up here and we've come down, and this actually takes some of the pressure off of monetization. Same thing here for the Qs. We've dropped below the primary level here, and same thing for IWM. We've dropped below the primary level here. What this speaks to is a little more weakness across the board, a little more volatility, because if you're between what we call the goalposts, you're closer to the zeros, and when you're closer to the zeros, the dealer action or response does not have to be as strong, and the market does not respond as strongly. There's no impetus necessarily to take profits as we drop below these dominant GEX levels. Remember, the SPX is cash settled. The SPY, the Qs, the IWM are equity settled, and if you're in the money, you're more likely to close those positions, causing a downward pressure on them, on the overall markets. If you don't understand that cause-effect sequence, please join us at GammaEdge.us, and we'll talk more about that. When we take a look at the market model, we are still bullish, but we are cautious. We do have now 2 days of strong breadth, which is great. We have not had this for some time. Again, go back to yesterday's video and I talk a little bit more about this. We did see some risk off in the afternoon where we saw some of that profit taking that we alluded to, but we did not see it into the close, which is a positive thing. Basically, we just saw some alignment and some reaction, we think, to the monetization events that we spoke of yesterday. Overall, a pullback when we're in a positive condition on the cumulative tick is healthy. It's what we want to see. We want to see some sideways action as we digest the gains over several days. We're well above what we call the ribbon or the historical turning points, and this is good. We're still continuing on this bullish evolution. For that reason, we're going to remain green, but we're going to put this yellow light up here just because we do have some of the risk off that is shown here. But as a whole, this still looks good. It's very constructive, and we're we're bullish for the medium to longer term right now until proven otherwise. When we take a look at vol in the VIX, a little bit higher range. We've had a couple days of higher range here, and we're going to want to watch this. As vol moves up, that'll be an indicator, especially if it takes out the 117 level, which is the midpoint here of the Bollingers. We're going to want to watch this. This usually, not always, but it usually leads a reversal event, and so we want to take a close look at that and make sure you have this in your toolbox. You can see that we're stabilizing right here at 20 in terms of the VIX. We're going to be looking to see a close above the high of the previous day. We're not there right now, but certainly if we start moving in that direction, we'll want to put a spread on in this area of some duration to take advantage of a potential move upward. When we take a look at the ES, we're actually seeing pretty much a green light across the board. We're seeing vol hold steady here. We're seeing positive trans actually drop. Positive trans, I know there's been some questions that have come in. This is the strike at which it and all strikes above show a net positive gamma. Why that's important is that the gamma condition for the ES, if we're above that, we're clearly in a net positive gamma condition, and so there are calls are in the money, etc., and we can react on that behavior because we have a good expectation of what the dealers will do and what people will do. Now the expiry is still 70 some days out, so the magnitude of monetization that we would see here is not as significant, but nevertheless we do color this green, and we do see this overall as a bullish status on the overall markets. I particularly like this presentation because it is a single expiry. It is a look ahead to basically tell us what folks are thinking on a quarter-over-quarter basis, and right now they are bullish. When we take a look at the GEXpiration, you can see across the board, with the exception of some very minor levels, we are net positive, and this is a positive gamma condition for the SPX overall. We had a significant change for today. This is today's expiry. It was slightly negative yesterday, and now it's all positive as people monetize and do what they are expecting. Remember, today is the JPM hedge roll, and we will see 43,000 puts vaporize at 45.10. 49.20 is where the short call leg is. That will most likely, if there's any value left in that, will also be used as part of the roll. And then down there at, I think it's 38.10 or so, I forget the exact number, but those are very far out of the money and probably have no remaining value whatsoever. So if when the roll occurs, any delta that's left in those 45.10s may be used to offset some of the delta of the roll, and so the impact on the dealers into tomorrow will be minimized. We'll be watching this today. When we take a look at the net GEX by strike, you are here, 46.02, so on this dominant gamma level. This really becomes a line in the sand. You can see there isn't a lot below this. There are a few little spikes here, and we'll talk about that here in a second. The JPM hedge that rolls off today is right here, and this will vaporize after the end of today. The first major line in the sand is 44.50. You can see it's not very strong. There's not a lot of definition in this area. We call this a transition area. We could see loose and wide type of behavior if we fall down into this area. This is for the SPX combo, AM plus PM settled. On the high side, 46.50 remains a very key level. Do not think we're going anywhere near that today. You can see there's a couple other interim stopping points here. Key thing to take away here is that this 4,600 level is pretty important, and we need to remain above that. We don't want that to become resistance, because then we're going to get pretty sloppy. I think we'll get pretty sloppy in here, especially with the removal of those puts. When we take a look at the 0 DTE, showing just one tile here, so this is today's expiry, positive, fairly strong. Looking at that 46.50, we have a lot rolling off there. Again, I don't think we're going up there. Down here is the JPM at circle 5. 45.90 is expiring today. You can see we finished right at 4,600. Go back to yesterday's view. We had a coincident zero at the 45.95, 4,600 in both the SPX complex as well as the expiry, which is our thesis of why we pinned here. I think the key takeaway here is that if we do fall below the 45.90 today, we could see some downside action here. Depends on if this gets monetized or not. The 45.30 level could be in range, in target. We'll just have to wait and see. Finally, when we take a look at the SPX, net positive, very strong level. This is we are clearly in a positive gamma condition. Lower volatility expected across the board. The deltas are all green, as you can see here. We do have some negative gammas that are creeping in here at 45.20 and below overall. I think the key takeaways here, this is a major dominant level up here at 46.50. You're going to want to keep an eye on that. I don't think we're going anywhere near that into the close, and certainly I don't think we're going to be above that into the close today. Anything's possible, of course. Your crystal ball is as good as mine, but it just doesn't seem that we're in that mode right now. Downside, I'm a little bit more concerned and aware of what we're looking at here. And again, that 45.20, 45.30 level, you can see there's just virtually no definition down here. Now I know as spot, the yellow line, as it drops down through, we'll start seeing some dominance grow down here. So the 44.50 will continue to grow in proportion to everything else. That does suggest that the 44.50 level is a fairly significant downside support level. But you can tell that's 3.5% or 3.3% down from our close last night. So that would be a fairly significant move, well outside the expected move. So I don't think we're gonna see anything in here today. So watch for this 44.50 level. So that's it for today. A lot going on, obviously, with the JPM roll, end of the quarter. A lot of window dressing going on, of course. I think in general, be careful. We are in a net positive gamma condition, but overall there are some cautionary things to be watchful for. If you'd like more details here, please join us at www.GammaEdge.us. That'll take you to a Discord sign-up page. You'll be able to get into the Discord, 14-day free trial, all the tools turned on. We got a great group there, a lot of interaction going on, so would urge you to come in and join us and learn how to apply this stuff to your style of trading. Follow us on Twitter, please, at GammaEdges with an S, and would ask that if you are watching this off of the YouTube link, please like it if you do like the content, and please subscribe to the channel so you can get notified of the next time we post something. So thanks everyone, make it a great Thursday, and good luck to everyone. Take care.